The market sinks in the wake of all of the Musk Fud. Why this really isn't bad overall. Let's talk about it. What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And I am back today with a pretty important update to help everybody realize why this current market slump is really not such a bad thing when we consider the big picture. So today we're going to jump into the Bitcoin chart and look at XRP and also Ethereum and maybe a few others and discuss why this slide, why this bearish trend is not the end of the world, and how this can actually be something positive for what's going to happen this fall when we enter into the all-out bullish phase of the cycle of the market. So let's just pull up the chart. Here we are with BTC, and let's get rid of my handsome face and break down the chart and look at the damage after we have had the psychotic tirade of Twitter posting from Mr. Elon Musk. Now, I wouldn't call him a con artist or a crook, but I would rather say that he's playing games. It is clear that he is playing games because he's saying things that don't make sense. And they are so absurd that I think that we're the dumb ones for thinking that he's really serious. He's doing something. He's doing something behind the scenes. Either he has a hidden agenda or somebody is manipulating him. But it doesn't make sense to say that Bitcoin mining is bad for the environment because it causes an increase in electrical production from dirty coal plants when the vehicles that he produced run on the same electricity that the Bitcoin infrastructure runs on. All of the blockchain, for all of the massive mining rigs and operations that mine Bitcoin, they're plugging into the same system that make his cars go. So we'll just leave that alone and talk about the chart. All of this in the wake of the Elon manipulation. So let's start out on the one-day chart instead of the 4-hour chart. We see the bigger picture here. I was posting in the group just yesterday that something that was key to me was the break right here of this descending baseline. So what we ended up having was kind of a massive head and shoulders formation here. Let's just put some arrows so we can make this clear. There's a head and shoulders. And so I was thinking, hey, if we don't stay above this descending baseline or the neckline of the head and shoulders, we could drop. And sure enough, we did. So on this one-day chart, you can see it very clearly that the price line has dropped straight down to the 200 moving average. The 200 exponential moving average line on the one-day chart, and then it just kind of bounced back up. So we're sitting here at this 44,000 price. But this is probably not going to be the end of the slide because we're looking at the stochastic right here that is very bearish because the fast line and the slow line, the percent K and the percent D are kind of They're moving away from each other. It started to curl over here for a possible crossover and a change in cycle. But now we can see that we have a divergence. So we're going to call this a bearish stochastic. Now, the MACD just looks terrible. This is ugly. And the reason is I don't like this distance between the oscillators. There's your percent D. Here's your percent K. And we have this ever widening gap as we're moving in this steep direction down. So when these are far apart, that is an indication to me of momentum happening in the direction of travel. So it appears to me that this is not the bottom of the MACD. These histogram bars here can continue to sink down, and we might get something like this. I don't know how long it will take, but we will probably have a full cycle here on the stochastic, and they're never usually just this pretty. This last one was pretty. Look at this. We came down and we moved right back on up, and we had a double hump camel with these two humps here. And then, as always, we look at what the price is that is returned from each stochastic peak and dip. So on peak number 1, here we are. Peak number 2, we had a higher high. Peak number 3, yet another higher high. We had this double hump camel here for the all-time high. And so the next 2 peaks at these 2 points returned lower high, slightly higher high, but it did not break the previous higher high. The last 2 big ones. It did break this one, but not these 2 here. So that was an indication that we were probably going to hit a dip. So sure enough, right after we got straight here to the point of control price on the VPVR, we had this. We took a dive bomb. We had a slight break at this volume node, a slight break at this volume node, and then we hit another slip zone. I like to call these areas here where the volume is lower, I call that a slip zone, because we usually have a magnetic attraction towards these big volume nodes. And that's why I don't think we're going to really hold at this price, because it is within this slip zone. And we're probably going to be headed for this volume node if this momentum keeps up. So let's clear that out and maybe scrunch the price in so we can see what is below. And these are the nodes that kind of stick out to me. Let's move this to red. Of course, we've got this price right here at roughly 34,000. So that's a possibility if we don't hold the 200 EMA. If that exponential moving average line is not held, we're going to fall all the way probably to this 34K. Some people were saying that it's possible to hit 20K. It is possible. Look at this volume node here. So if we don't pick up that momentum and keep on moving up, this is possible. Now, let me show you why even if we hit 20,000, it's still not super bad. If we zoom out to the 1 week, we want to see what the price line looks like since 2017, and we'll look at the all-time high here. Let's draw a line here and just we'll put a box around it. Everything that happened before that peaked out here at 20,000, that was a resistance, and we see that that resistance was kept until we broke it here. And so now former resistance can become support. So if we were to dip all the way down to 20,000, and I'm not saying that'll happen, it's least likely, I would bet you that this is going to be a very, very strong bounce. Let's make that green, as a matter of fact. We would probably get a strong bounce and a move into the big rush for the fall, the big bullish rush to the new all-time high. So on the weekly, we see that the stochastic and the MACD are still very bearish. We're in the midsection on the stochastic, and we just had this crossover, which is a sell signal of the oscillators on the MACD, and there's plenty of a way to go. So once we finish this cycle, it's going to be a resumption of the bullish trend. It's still a bull market, and it will continue to be a bull market until we break a critical level like this at 20,000, which again, I think is not very likely. I think the probability, let's make this one in blue, we could come down to 40,000 and move back up. Another probability, of course, is the 34,000 mark and then start to move up. Of least probability would be the 20,000 dip down to here, but it can happen. And I always say, prepare for the worst and just keep in mind that anything can happen. As soon as everyone says, nope, that's impossible, can't happen, that's when we get slapped around, smacked around, and then we learn our lesson when those kind of corrections hit. Now, when we look at the overall, let's just draw on this a little bit with, let's go with the green. When we look at the overall, this movement to 20,000 and then the long distribution period and the accumulation turned consolidation, and then the big bump, which flew us into the current bull market. If we dipped like this and we come down to the 200 EMA or the 50 EMA on the 1 week chart, which is right here, or even the 200 EMA, which by the time if we hit down there, it would magically be right here at about 20,000. Either one of these is still a part of the overall progression of where Bitcoin is going to go. So let's look at it. Either way, we're good to go. We're good to go. So this is an important piece of the puzzle where this correction has to happen in order for us to receive the benefits of this type of a breakout. So it's a part of the puzzle. The market doesn't just start at one point and go straight up. It's not the way it goes. We have to go through these phases of distribution, accumulation, we get the bump of consolidation, and then we get the markup phase. And we're still in the markup phase, but we have this correction that's going on within an overall bull market. So it's not negative. It could have been anything at all. It could have been the Elon Musk Fud, or it could have been government Fud, you name it. It's like this. Draw the chart out, watch what the chart happens, and then create the news to support it. That's what I believe. I don't think that the news makes the chart. I think the chart gives the opportunity for people to spin it in whatever way that they want. So it is possible that Elon Musk is not responsible for this. He might not have that all powerful ability to wreck the market. It could be coincidence. Or at least that's my opinion. Now, let's jump back into the 4 hour and just see what's happening for the immediate, and then we'll just look at Ethereum. So in the immediate action, we can see here that the stochastic is still bearish. We're still in an overall slump. If you can notice that these peaks, they just tend to go down. Wow, look at that. Since the 26th, we're taking an overall movement where each oscillation, each completion of a cycle is returning a lower high. And then this MACD seems to be doing the same, where it's in an overall downward trend. Okay, so that's BTC. Let's just jump and look what XRP and Ethereum are doing really quick. XRP is actually doing pretty good. I'm impressed with it, and it looks to me like we have bounced off of the point of control price, and we're gravitating towards this fat volume node right here. We could hit 160. And if we fail that, $1, somewhere around $1.10 is a possibility. But once this lawsuit stuff clears, I really think XRP is going to fly. I think it's going to shoot up there and we'll probably break $2, $3, something like that. I've got a small bag of XRP. I'm not taking too big of a chance on it, but it's just there just in case all of the crazies who claim that it's going to be $589. If that happens, well, I've got a small bag to enjoy. Now let's run to Ethereum. In the last several days, I've been talking about Ethereum having a pretty decent correction. Since we were right here breaking this general trend, I said we're going to probably hit that 50 EMA line. And if we don't hold the 50 EMA, it's going to be the 200. And we saw both of those come to fruition. So here we have it. We did wick down to the 200 EMA, and I don't think we're done. We might zip to this volume node here, somewhere in this area. But if we don't hold the 200 EMA, what do we have? Another slip zone. This slip zone could cause us to jump down here to this little spike here in the VPVR, or this one, or we could come down below the point of control price somewhere in the, say, 2,000 to 2,400 range. But again, it's a healthy correction. And we see that the overall peaks, we ran up at the top here on the stochastic, not coming down. And then now we have this nice momentum headed downward since the all-time high that is confirmed on the MACD. And once we get to a bottom, somewhere down here in oversold zone for the stochastic and the MACD, I think the entire market is going to come back up. This will probably set off alt season. I do believe it will. Now let's clear that and just jump out to the 1 day on Ethereum, and we can see it here. There's your big crossover on the MACD, very bearish crossover. We have a stochastic that is right in the middle territory at the 50% line. We have plenty ways to go. If this decides to complete a full cycle, it's pretty obvious that we could touch down on this 50 EMA or jump down here to the 200 EMA. And the oscillators are telling us that the momentum is downward, so we should get some more bars on the histogram, rounding out a nice little slope there. And once it hits this zero line, it's probably going to be time for alt season to really run. Ethereum will go back on track and start to go bananas. Now, Ethereum has really gone far and beyond what I expected it to do, because I am one to believe that we'll hit a 10,000 Ethereum by the time we hit the peak of the bull run. It might be 15,000 because we have prematurely hit this 4,400, which surprised me. I didn't think that we would hit this this early. So it would be nice and normal to have a correction back down here towards the 2000s in order to gear up for a run that would take us past a break of 10,000, maybe 15,000. So that's all I've got for right now. I just wanted to point this out, and I'd love to hear your opinion about what you think with the Elon Fud or the government Fud, or if you are a believer that the chart makes the news and not in reverse. So we'll keep our eye on things and enjoy this dip. This is a time to do some dollar cost averaging. Once these cycles are at the bottom, I'll probably be picking up some of my favorite projects with the little spare change that I have left in my pocket. So opportunities will abound, and we have to take the positive out of everything. So that's all I've got for now. Like, subscribe, do all that good stuff, and I'll have some new basic videos, some Crypto 101 coming, and coming also soon, I'm going to be talking about memes. It's about time that we enter into the meme discussion because it's too big to ignore. We'll see you very soon. I'm out.